Welcome to The Explainer. Today, we are digging into Meezan Bank's latest numbers. You might have seen the headlines about a drop in profit, but what's really going on behind the scenes? Let's find out.
All right, here's how we're going to break it all down for you. First, we'll hit the big headline number from their Q3 performance. Then, we'll figure out why profits actually dropped. After that, we'll uncover some of the bank's hidden strengths, look at the challenges they're facing right now, and finally, we'll ask, what's next for MEBL? Okay, let's jump right in. First up, the headline performance. So what was the big story coming out of the third quarter of 2025?
So the number that really jumped out at everyone was this dip in profit. And that naturally makes you ask, right? Is this a red flag, or is there more to this than meets the eye?
Okay, so for the first 9 months of the year, we're looking at a net profit of 67.2 billion Pakistani rupees. Now, let's be clear, that is a huge number, no matter how you slice it.
But, and this is the key part, context is everything. When you put it side by side with last year's number of 77.1 billion rupees, that's actually a drop of about 12.8%. And that's the dip that's got everyone talking.
So you can see it's kind of a mixed bag, right? On the surface, yeah, short-term profits are down. But once you start peeling back the layers, you find that the bank's fundamental health, its very core, is actually incredibly solid. Okay, let's move on. Section 2 is all about decoding that profit drop. So what gives? Why did the numbers fall?
Well, analysts are pointing to a perfect storm of 3 things. It wasn't just one culprit. First, you got this policy rate squeeze. Basically, higher government interest rates were eating into their profit margins. Then there was this kind of unusual one-off expense, something to do with employee bonuses from last year. And finally, you have to remember that last year's numbers got a special boost from a tax credit that just wasn't there this year, so the comparison looks a little harsher than it really is.
All right, now for the interesting part, Section 3. Because if you look past that headline profit number, a totally different picture emerges. We're talking about a foundation of some serious and growing strength.
So check this out. One of the bank's superpowers, really, is its deposit base. A whopping 94% of all their deposits are in current and savings accounts. What does that mean? It means they have this incredibly stable, super low-cost pot of money to work with. That is a massive competitive advantage. Okay, to get a real sense of how stable a bank is, you gotta look at something called the Capital Adequacy Ratio, or CAR for short. Think of it like a financial shock absorber. It's the safety cushion a bank has just in case things go wrong.
And Meezan CAR, it's sitting at a really impressive 23.3%. Now, to put that into perspective, the regulators only require 11.9%. So they're sitting on almost double the required safety cushion. That's huge. And it's exactly this strength that lets them pay out dividends and weather any economic storms that come their way.
And they're not just strong on the traditional stuff. They're absolutely crushing it in the digital space. Get this, over 93% of all their transactions are now digital. They've got 4.1 million people using their mobile app. This shows they've successfully gotten their customers to bank from their phones, which is way more efficient than relying on branches and ATMs.
Okay, moving on to Section 4, navigating the headwinds. Because, it's not all sunshine and roses. The reports definitely point out some real challenges that the bank has to deal with. And this slide really gets to the heart of the issue for the bank right now. It's this constant push and pull. On one side, they are just brilliant at pulling in all those low-cost deposits we just talked about. But on the other side, the wider economy, with its high interest rates, is putting the squeeze on how much money they can make from their investments, especially from their portfolio of sukuk, which are basically Islamic bonds.
And all of that brings us to our final section. What's next for MEBL? So, you've got these incredible strengths on one side and these pretty big headwinds on the other. Where do they go from here?
Well, one thing's for sure, they are not sitting on their hands. The bank is planning a really aggressive expansion. We're talking about adding somewhere between 100 to 150 new branches in 2026. And they're not stopping there. They're planning another big network increase the year after that.
So you might think that profit dip would scare off investors, right? Well, apparently not. They seem to be looking at the bigger picture. Just look at this chart from K-Trade. It shows that MEBL's stock has actually done way better than the overall market index for most of this year.
And it's not just the market. The experts, the financial analysts, are singing a similar tune. For instance, K-Trade Research is still telling its clients to buy the stock. That's a pretty strong signal of confidence in where the bank is headed.
So, this is where we land. It leaves us with one big final question, doesn't it? Meezan Bank has this solid foundation, a powerful position in the market, and some really bold plans for the future. But the real test will be whether all those core strengths are enough to fight off the tough economic climate and really drive their next wave of growth.